Hey guys, it's Vivian, your hot stock girl. Today I'm going to discuss Micron. The ticker symbol is MU. Micron is one of the largest semiconductor companies in the world. Micron sells DRAM memory components for computers. The stock is trading at less than 3 times its trailing 12-month EBITDA, and it looks like the greatest value play among the large cap stocks. Is Micron a value play or a value trap? First off, it helps to know what a DRAM is. DRAM stands for Dynamic Random Access Memory. You will also see SDRAM, which stands for Synchronous Dynamic Random Access Memory. Long story short, Micron makes memory chips. Micron's memory chips are essentially a commodity that are made by many companies, including Samsung and SK Hynix. Industry-wide prices for memory chips are set in the open market and go up and down based on supply and demand, just like other commodities. Having said all that, prices are forecast to drop, which is why Micron expects to see lower revenues next year. The lower revenues will cause a big drop in EBITDA and free cash flow. With a big drop in free cash flow, Micron looks like a value trap because it's not as good as a value when the business declines. It really is how big of a drop there will be and how long memory chip prices will remain low. Personally, I don't invest in commodity-based stocks because it's nearly impossible to predict the direction a commodity will take. I do believe that the memory chip industry will continue to grow and next year's supply issues won't last forever. Since we know revenues will decline in the near future, we really need to go deeper into the financial statements to see if Micron is a good buy here at these price levels. Cash is about $5 billion, which is good, but it's not great when you consider the strong free cash flow Micron has generated over the last few years. So where did this free cash flow go? It certainly didn't go into paying down debt. Total debt has gone up from about $11 billion to almost $16 billion in the last 4 years. That doesn't excite me. So now we need to find out where the free cash flow and increased debt has gone. Here's a line on the balance sheet that a few people talk about. It's called property, plant, and equipment. Aha! We found the money. Property, plant, and equipment has jumped from $8.6 billion to over $19 billion. Now this is why investors should look at Micron. The company itself is investing in itself. On August 29th, Micron stated that they are going to spend $3 billion to expand their manufacturing facility in Northern Virginia. Micron has steadily increased its capital expenditures over the last few years. This shows that management is investing in the future of the company, and maybe you should too. My suggestion on Micron is to accumulate shares little by little over the next year or so. Buy maybe 10% each month of the total you would like to own. This way you get a good dollar cost average for your shares. And you won't have to worry about which way memory chip prices are headed in the short term. When memory chip prices improve again, you will make a lot of money. So there you have it, my thoughts on Micron. I'm Vivian, your hot stock girl, and please be sure to subscribe below and check out my other videos for more great investment ideas. Bye!